Bitcoin shows strength in the lead up to this week's US election, and MicroStrategy unveils a brand new plan to boost its Bitcoin buying spree. We cover all this and more in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. This week, I'm joined again by Collective Shift research analyst Simon, taking over from Matt, who's taken another well-earned week off. How are you going this week?
Yeah, I'm doing really well, and Matt's another week off, well deserved from him. Maybe it's becoming a bit of a repeat for him to have some time off, which is good because he works very hard. But yeah, I'm looking forward to getting into this one, mate.
Yeah, maybe he knows something that we don't. He's resting up for a big 2025.
Exactly, yeah, a bit of a rest before the craziness is about to come. That's a good idea. Maybe we should be doing that next week, Nick.
I think we might have to actually, although when I take breaks, things tend to unravel. We have a lot of inside joke at the company that whenever I go away, something massive happens because I went camping last time and FTX collapsed before I was able to get back. So here's hoping that's not the case.
Okay, warn me before you do that and I'll make sure I sell.
Touching base, maybe start off with a market update here. We all saw Bitcoin touched inches within a new all-time high, but failed to break through this range. So everyone was excited. We may get a pre-election all-time high, but it doesn't look on the cards at the moment. So we may have to wait to after the election, although Bitcoin, I think, is still up in the vicinity of 8 to 10%. So it's challenging that and staying around that 70,000 mark. Doge, I think, pumped another 40%, which is, these days you don't really see Doge react to a lot of news online. It's kind of started to get desensitized to it. But I think with Elon Musk tweeting a lot about Doge and talking about it being in the Government Efficiency Commission, that reacted the price considerably. Even in traditional markets, I'm seeing perhaps some of the uncertainty we'll talk about is taking place. The S&P is, I think, down a couple percent, and it's actually in a fear rating on CNN Business at the moment. So maybe we'll get into this now as we look into the election, Simon. We want to preface this by saying, hey, the election is 12 hours away from counting the votes. So if you're getting this late, just a bit of a gentle reminder here that we'll cover all the run out and hopefully we get a winner by the next pod, Simon.
I hope so, mate, because we don't want to keep talking about it because it's obviously been playing, it's been hanging over the crypto markets and I guess the entire world economy in many ways. So it'll be very good to get this behind us. But just on the BTC inching to close to its all-time high, I think actually on some of the exchanges it did actually tick over as a new all-time high. So it wasn't very clear though because it only just kissed those numbers. I think everyone was getting very exuberant and hoping. I think that was possibly off the back of a lot of polling and hype around Trump having a very clear margin of victory. And so I think that's kind of people just playing this narrative that Trump win, very positive for crypto, Kamala win, very negative in the short term for crypto. So I think that was the kind of hype around that. And I think people went, hey, this is actually a two-horse race. And so the market's kind of cooled it down. But, realistically, we're still in that sideways chop. Everyone's hoping eventually we get past this uncertainty of the election and we will see that move. Hopefully it's the upside, but we don't really know.
I've shared this chart that we've got. I think that you presented for some members as well, Simon, here. We shared it in our newsletter. So this is a chart where we're looking at the range that we were in. I think we actually did tick above this line here briefly, but I think obviously we got sent down just marginally below. So this is the chart you're talking about, Simon, how we've just been in this 54 to 72K range for now. You're going on 35 weeks, actually.
Yeah, it is that one. It only wicked above. So, there's plenty of people say, you don't get out of bed for a wick. And so unless we close above that kind of range, we're not really clearly going to say we're out of that range. And, that's, how technical you want to get on the technical analysis side of things there. But that range has been going consistently for a very long time now. And I still think, it's very close now. We'll know next week whether the election does push us out of that range or not.
Yeah, and that's, as we talked about in the warm-up to the pod, you mentioned that normally there is a winner we don't have to really wait a week and a half after the election to get the result. So that's probably, in my mind, probably the worst, maybe one of the worst case scenarios in the election, really, that there's still uncertainty, because we all talked about how the market craves certainty, especially how we've seen Bitcoin move higher after the elections. If there is a situation where it is contested or it's not that clear, especially with all the controversy about no ID voting and the massive amount of accusations going on about people who are defrauding the system essentially and voting twice, that would I think really impact Bitcoin's ability to go past there in the short term. Who knows? Because one of the things like to remember is, hey, Bitcoin is the most liquid market that is open 24/7. And we've seen in a lot of major events, it did sell off first. But when traditional markets reopened, it actually started to rebound because it was just such a first move and was the only thing you could get in and out of, when the market is off, really. So that's something to keep in mind. And expect, I think, a bit of volatility, given that I think Trump's fallen about 10% on his poly market highs. And a lot of the traditional pollsters are saying that's still really too close to call. So as we said, we are 12 hours away from this. So if you're getting this, the votes may have started counting. So looking forward to hopefully a result.
I think the good thing to think about is that historically, regardless of who wins an election, Bitcoin has always actually gone up after it. And that's also kind of coincided with the 4-year cycle of crypto and I guess the business cycle in general. So it's just the uncertainty that seems to stop the market. But historically, every time after a US election for president has completed, Bitcoin has still gone up and significantly up. And also you should add that, seasonality wise, everyone talks about how Q4 is always good, but there's also the seasonality element of when we've had a green September, we've had green October, November, and December. So that's every time Bitcoin has had a green September, we've had very big green October, November, Decembers. And so we're on track with that. We had a green September, we've had a green October now. Does history repeat? Don't know. But, history says it will do that. And I'm expecting that. So we'll see.
Yeah, that's the similar sentiments that I have. And I saw probably the most telling graph of the week that said that the US ran the largest budget surplus outside of the COVID-19 pandemic. And I think the elections have been pretty obvious because no party has really tried to solve any of this core debt problem that's currently going on. And that's why I probably with you there, Simon, on I think Bitcoin goes high no matter what, because I don't see the US situation fundamentals changing anytime soon.
Yeah, absolutely.
Another defining moment here was Bitcoin showing a lot of strength, I guess. So I'm not sure if this is reading too much into it. Are people accumulating Bitcoin before the election, or kind of punching their ticket, so to speak, on a Bitcoin move higher? Maybe they're expecting a continuation of the Bitcoin cycle, because we saw Bitcoin dominance move to 60%, which is one of the highest it's recorded in, I think, 3.5 years. So is this something there, Simon, or do you think it's just people that are starting to swing back into Bitcoin?
I think it's two elements here. It's definitely people seeking safety in the crypto markets with the uncertainty of the election. So there's no doubt that's an element of it. I think there's a second element of it in that people are capitulating on the ETH BTC chart. I think there's so much negative narrative around ETH that I think people are actually finally capitulating out of it, which could be good for them or could be bad for them in hindsight. But I think that's just, there's a lot of fear going on around ETH. And so where else do you park your money instead of ETH? Well, it's probably Bitcoin. And so I think that's probably telling of why that's there. Because, BTC price hasn't actually gone up much at all, as we've just shown. It's been sideways for so long and we're still not putting in new all-time highs, but BTC dominance is still continuing to go up. So what's that meaning? That means it's the value of everything else is actually going down. There's money being taken out of the markets to a degree here. And so I think that's something that's really at play here, is that we are still in a fearful, uncertain state. And so BTC is that place to put your safety, but it's just the value of other alts is just deteriorating, going down, because Bitcoin is not actually pushing new pricing.
Yeah, and this is such a good chart because it normally signals a topping before we get a transition to altcoin. So that's why a lot of people like to watch the Bitcoin chart. Once we see a trend reversal, that kind of says a lot that maybe an altcoin season may be on the way. One learning I had in the last week was looking at this chart, and I realized, well, we got to about high 70s in previous markets. We may think that we're not there at the moment, but at this time, stablecoins and their representation of the total market cap wasn't as big. So I would even think that this is probably a few percentage points higher in reality, because now we know that the stablecoin market is almost a $200 billion industry. Back in 2017, even early 2020, it wasn't the size that it was today. So in my mind, I actually think that Bitcoin dominance is even higher than probably recorded, because we always forget just how dominant stablecoins are in the market.
Yeah, and I'll agree with that, but it's also massively a indication of how weak Ethereum is, because while Bitcoin is like 60% of the market, Ethereum is probably roughly around 30% of the market. So if Ethereum's doing badly, then BTC dominance is massively going up because it's such a huge factor of the rest of the market space. So it's kind of very similar to the ETH BTC chart, really, if you wanted to put those and compare those two together, because Ethereum moves that BTC dominance the most.
Yeah, and I even saw, I think Bitcoin open interest hit new all-time highs, I think of 43 billion, even on CMC, which is, or CME, which is looked at kind of a proxy for institutional interest in Bitcoin. That also hit, I think, 12 billion, which was up about 40% or so, and hit, I think, one of the all-time highs. Now, this I think take it with a grain of salt, obviously, because as the Bitcoin market moves higher in size, obviously this is not reflected proportionally, but it does just show that, hey, interest in Bitcoin has really never been higher. And I was really encouraged to see some ETF flows. If we look at this chart here, we can see that I think it hit the third biggest inflow since it went live back in February or early January. So this is another chart that kind of, if we put all it together, really sinks that people are maybe starting to punch their Bitcoin bags. As we talked about, we expect it to kind of go higher, irrelevant of who enters office, unless there's some insane black swan event that they've all of a sudden capitulated and solved the US debt crisis, which I would love to see that happen, but I don't think it's happening anytime soon.
Yeah, and that graph there is a really great one to show the ETF flows, because we had a fair downturn in the middle there with not a lot going on, but the action's starting to come back. So people are interested, and maybe that's also because the ability for more people to access it has come into place now. The other institutions have done their due diligence and are now able to offer it as a service. That was always a theory that was going on, that there's more people waiting on the sidelines to get in, but there's all these other banks and institutions that have got to do their own checking and research to make sure that they're happy with the product before they offer it to all their clients. And I think this is possibly demonstration of that wave coming. And I think that is obviously a very positive sign to see that the BTC ETF still has huge interest and is continuing to deliver, a lot of value to the people who want to buy this product.
Yeah, me and Matt always focus on maybe the people overlooking that factor that, hey, these weren't rolled out as to everyone on the first day that you would have thought. That's why I'm really interested to see whether we're going to see a wave 2 of this initial hype, because we can sort of see the charts playing out very similar. Because once these things are even being able to offer to people who didn't request them per se, then all of a sudden you have people who may not be interested in Bitcoin, or maybe they're being allocated passively and they don't even know that they are. That's been the real big hope, and we see, I think, BlackRock's fund start to, I think, put about 2% towards Bitcoin, which is extremely encouraging. But not sure if you had anything there, Simon, before we get on to probably the biggest news of the week, actually.
I'll add one more thing to this graph so people who are looking at it can see. But there's one big takeaway that I can see is that there was always the argument that people were just selling out of the Grayscale Bitcoin Trust and moving into the other ones because of fees. Well, that's not really happening anymore. It's probably all the people who wanted to get out of the Grayscale Bitcoin Trust have done that now. So these is just inflows now. There's not a net outflow going from the Grayscale Bitcoin Trust anymore. It's very much so just money coming in. And so I think that argument is kind of settled. I think people who wanted to be out of the Grayscale Bitcoin Trust are now out. And so this is just new money coming in, which is, a unique point of difference compared to earlier on in the year.
And they're still, from what I'm seeing, the most successful ETF launch ever, which people compare it to gold or like so. But yeah, we're really seeing that the appetite far exceeded any expectations from, I think, 99% of the market. Yeah, so let's get into the MicroStrategy one here. This was actually some of the news that I wasn't expecting. I was expecting MicroStrategy to continue their buying spree, but I was not anticipating them to try to raise 42 billion to go even further. So we know MicroStrategy, which is a famous software company that has started to buy Bitcoin and basically place themselves as a levered Bitcoin play by borrowing and then buying extreme amounts of Bitcoin to back its company, and they use any cash flow to do so. They're going to raise 42 billion to buy more Bitcoin over the next 3 years. And this is something called a 2021 plan. So they're going to raise, I think, some of it through dilution of company stock, but then other debt offerings here. Big play here, and really underestimates just how much of an impact this has on the buy sell market, especially when we know that, hey, there's only something like 450 Bitcoin a day or so. So insane amount of buying there. Simon, what do you make of this?
I'm just wondering, when do we stop calling MicroStrategy a software company that buys Bitcoin into a Bitcoin company that just happens to have a side software company going along with it? Because their treasury is so enormous now in Bitcoin that I think that's definitely at play, in that they're not not to diminish a small business that has like a $400 million annual revenue. So it's a big business, but I think it is over time going to pale in comparison to its Bitcoin strategy. And I think the simple answer is that this is just Michael Saylor doing Michael Saylor things. He's the biggest walker of the walk. He talks it so much, and he's just constantly every day living and breathing his Bitcoin plan, and it's playing out. And from us being on the crypto inside, it seems to be like it's going to be one of the best and biggest plays into crypto ever, and he's going to be incredibly successful from it. I can't see it going badly for him, considering that Bitcoin just continues to show continued dominance, continued adoption, continually demonstrating its store of wealth value. So I think it's very much so a leveraged Bitcoin play, and it's paying off massively for MicroStrategy and MicroStrategy shareholders.
Yeah, we can see in this chart here just how I think when you overlay also Tether's buying, but also MicroStrategy's buying, and this is before any of the accelerated buying happens. I was actually talking to Checkmate over the weekend at our event, and we were both talking about how not irrelevant, I guess, changes of the halving are, but just how more important the buy side is at the moment. Because when we think about that small amount of Bitcoin that is changed, so it went from 900 to 450, and then when the next halving happens, it'll be even more. This really, in my mind, isn't as important these days when we have big companies like MicroStrategy pledging to buy significant amounts of Bitcoin, and then even when you have the ETF demand for Bitcoin far outpacing issuance. So if you actually have a look at a chart, I did this over the weekend, maybe we'll put it in this newsletter, and you can just really see that it's a really tiny change of the Bitcoin issuance when it happens in the halving. But then if you overlay that, you can actually see the line with the amount of MicroStrategy buying and ETF flows. So it really shows that, hey, Bitcoin halving, it's a nice narrative that gets people excited, but the real price movement here is huge buying by MicroStrategy and ETF demands.
Yeah, that's incredible. I look forward to seeing that graph if you produce it, mate.
Yeah, also, I really want to include the MicroStrategy. Have you seen the one how they plot their DCA over the last couple of years? Fantastic graph that I think anyone new to crypto should have a look at, because they did it the old-fashioned way, just DCA. They bought some at the top, and they were famous for buying the top, quote unquote, at the time. Yeah. But that's proven irrelevant now, and that's what we tell I think a lot of our members that, hey, just play the long game, and it'll pay off if you just do it nice and slow.
Well, I remember that MicroStrategy was down billions of dollars in treasury because Bitcoin price did go down, and they did buy at relative highs back then, but they've continued to buy, continue to dollar cost average through the bear. They've got their average price way down, and now their treasury is like doubled or tripled or something, or their original purchase value. So they're the true demonstration of a buy and hold strategy and just dollar cost average in, and you're going to do really well with Bitcoin.
Perfect. We're pretty Bitcoin dominant in this podcast, actually, but I think that just shows where we are in the market and probably where I think everyone's mind is, and that's why also Bitcoin dominance is so high. Like I saw some university, I think one of the first, Emory University in the US became the first college to invest in a Bitcoin ETF. It was only about 10 million, but it's probably the signal of some more of these universities or institutions, Bitcoin being kind of legitimized. You wouldn't have seen that back in the day. It would be very controversial to hold Bitcoin as a university. I'm not sure if Bitcoin's going to be turned as a treasury asset. Were you on that kind of narrative, Simon, or did that not really appeal to you as much?
I think it's simply a case of many institutions and companies are going to come to the realization that holding dollars is just risky for the business, especially if they've got a large treasury and they've got to hold it long term. So they've got to park their money somewhere. And so over time, as hopefully the volatility of Bitcoin goes down, this becomes more and more appealing. See, right now, the thing that stops institutions using it entirely as a treasury is simply the fact that, it's going to go down 80%. So that's not good. But if they've got that longer term strategy, then it seems like a bit of a no-brainer because they got to fight inflation. Where else do you park your money? And that's the Michael Saylor attitude. So yes, I think that makes sense that all these other businesses, colleges, institutions, they're all going to kind of get around to that same conclusion, you would think, at some point in time.
Yeah, I tend to agree with that, really. And it's going to be a big one to see if that really dominated the bull market in 2021. We saw Tesla start to accumulate, buy Bitcoin. We saw a few other major companies. So for me, that's also not a top signal, but once we see even more acceptance and buying by these public companies, I wonder if that's going to happen this cycle through, because we haven't seen as much as last cycle, but Still early days, really, in the grand scheme of things. Maybe hitting some more negative news, actually. I saw some crypto layoffs that this took me by surprise, because normally you see crypto layoffs in a bear market and you see a lot of these more news stories happen. And it's what we've kind of talked about in my mind, in that maybe an altcoin season or Bitcoin bull market won't rise all tides here, and we'll still have companies that maybe are really struggling that won't catch the wave. So we saw Helium, although they actually were one of the standouts in the Solana ecosystem, they cut 40% of their staff in August. Consensus, which is a big Ethereum-based operation and software company, they cut 20% of their workforce, and DYDX Trading laid off 35%. So we're seeing, despite the bull market, some of these companies are trying to thin down. Perhaps they're learning their lesson from last time.
Could be learning their lesson, or it could just simply be they got a little bit ahead of themselves, because this bull market kind of did kick off this time last year and everyone got really excited. We had a huge price rise. And so these organizations started scaling to a degree to meet that demand. But it's pretty much March when we had the local top. And as we've said, there's sideways action, but there's been a lot of downward price action actually on altcoins. And that's affected the market. So I think I'm not surprised that some businesses have been struggling during that period when the excitement has died down. People aren't talking about crypto. People aren't looking at crypto. And altcoins are bleeding massively. So that is a kind of, a bear cycle within the big broader range bull market. So it's not a good sign for those companies. And yes, it normally would definitely be more of an absolute, bear market kind of period. But I guess, as you said, I think you're right. Not all altcoins are going to do well this year. And so could be a simple sign of that, is that, hey, if you're got an old altcoin and if these companies are doing this, it's a fair sign that they're struggling. But yeah, you're right. Helium is an interesting one to cut 40% of their staff, because Helium has been a standout. It's definitely been demonstrated as one of the best DPNs out there. It's got real product market fit. It's got a real working product and people can see it really being used. Obviously, they're struggling with adoption is my take on that. But I haven't seen that from when I've been looking at Helium. They seem to be growing steadily. Maybe they just overcapitalized to a degree and they're just trying to make sure that they've got enough money to continue their runway as they roll the program out. But it's not a good sign for something like Helium. So that one comes quite a surprise to me. I didn't know that's that.
Yeah, and Consensus also blamed, I think, the SEC investigations, because they're being sued for their MetaMask offering, their crypto wallet, by the SEC, and they're in constant, I think, leading up to one of the biggest court battles we've seen really outside of Coinbase. So they blame them for the pressure and just the huge amount of resources that they have to take up to fight this ongoing lawsuit in the US. Just touching base here, I also saw Tether. There was rumors that they were being investigated by US government on anti-money laundering stuff. They denied this. So this one's a bit thin. So hopefully we can get some more details in the coming weeks. Also saw Immutable got handed a Wells notice. So they're one of the first gaming projects that I've seen that has been handled a Wells notice. Normally it's been only reserved to a lot of these exchanges or DeFi applications. So this one was an interesting one, and just yet again shows, I guess, why maybe the election's so important, because we're still seeing a lot of crypto companies being sued. And I think Immutable was famous because they avoided US persons as well in their airdrop because of concerns, I think, about the regulatory environment in the US. So hopefully, a better or more favorable governments come in to provide more clarity on the market. But I think that's just a wait and see. And that's probably a reason why altcoins are struggling, to be honest, because there's just so much uncertainty for them in the market.
Yeah, but my also very quick take on that is it wouldn't be a good bull market if there wasn't some Tether FUD going around. So, hey, maybe that's a good sign.
Yeah, exactly. Yeah. And really, that would really have to be fumbling the bag for them, because this doesn't look like it's concerns about the reserves, but more so maybe about some compliance measures they may or may not have been doing to the standards of US regulators. So in my mind, not too big of an issue if it's just, to do with money laundering accusations and not anything to do with the reserves, because, they actually come out and with one of the most profitable quarters this in the last couple of weeks. So they really would have to be fumbling the bag to really mess this up, to be honest.
That is a strange one. And from all I read about Tether, they actually respond quicker and faster than like USDC does to freezing accounts and things like that. So I can't imagine it's around compliance, because from all accounts, they do it faster and quicker than USDC, maybe because there's less politics behind how their business is set up, so they can actually just act faster than the likes of a USDC.
Altcoin updates here. I really noticed Solana just continues to dominate. We composed our shift list report for our members, and we really highlighted the big strong fundamentals that continue to propel Solana higher. We saw a new high against the Sol ETH pair, as well as a new or close to touching a new dominance high. And the network held up pretty strongly considering it had one of the biggest airdrops on the Solana network, which is called Grass Protocol, which is another one of these deep in protocols that are built on Solana. A couple wallets buckled under the pressure. So Phantom had some downtime with its application, but the Solana network as a whole really stood up in another big test for the network. Is this kind of what you're seeing too, Simon?
Yeah, definitely the network is standing up and doing well. And hopefully, once that fire dancer is out, we can stop calling it in beta, which would be nice. I think even Tolly said he's going to do that. But on the Sol ETH pair, I think this is more demonstration again of just the weakness of ETH, because Solana on a USD price hasn't really changed that much. In fact, it's down from where it was in March, like most other projects. So this, again, to me, the Sol ETH pair just shows again and demonstrates that ETH really is struggling. So Sol's going up against it, even though USD price is not changing. So it's showing to me, again, this is not an ETH bull market. Not that I hate ETH or anything like that. I still think ETH is a great product. It's got huge potential for the future. It's just not the flavor of this bull market.
Yeah, that was a big takeaway too. We had for context, we had our 4th birthday party here at Collective Shift. So we hosted a lot of our investors, a lot of members and industry partners to come celebrate with us. And that was one of the biggest questions that I had all night, was a lot of people sitting on the sidelines that may have been holding a decent amount of ETH and really being unsure what to do with it, or maybe selling, or being really concerned about it really being irrelevant this cycle so far, hasn't got a bit higher. That was a huge talking point for me throughout the night, in just so much uncertainty with ETH. And that's, I think, a core reason why we saw Vitalik come out the last few weeks and really step up, I think, his leadership in the space, providing a lot of blogs, a lot of details on where Ethereum could be moving forward. And, it's probably will continue to be a big unanswered question. And I think if we get to 2025 without a new all-time high, that's probably going to be the biggest lesson or learning from the bull market, if it's yet to get that new high. Continuing here, I saw Celestia on the altcoin space. They have really struggled with a lot of sell pressure of late. So this is probably a really good lesson for people who want to learn more about maybe why token unlocks are a really important catalyst in the space here. If we look to the chart or total market cap, we see Celestia sitting at about 1.1 billion market cap, but that shot up almost $1 billion overnight. And this was because of token unlocks that I think had their 1-year vesting schedule start to be unlocked. And this increased the token supply by circulating supply by about 80%. So Celestia, one of the, I think, highest hyped altcoins of the last 12 months, really struggling, I think, with some sell pressure, as we can see. I think it was down 26, 30% on 17% in the last 30 days. This isn't too uncommon, I guess, from the current altcoins at the moment. That's also worth contrasting to, but I'm not sure whether this can be taken two ways, Simon, whether it's supplies finally entered the market and that means that the sell pressure is going to be too strong for demand, or whether it's going to be what Solana saw, where a lot of the supply overhang starts to get eradicated now that all the fears of this 80, 100% increase in the supply may be over, and that could set up for Celestia to move higher. I'll probably be in favor of the first one there, because I just think that's a huge amount of sell pressure that we didn't really have to contend to last cycle.
Yeah, I think a lot of people front ran this, so there was a lot of sell pressure. I mean, even when you scroll back down there and you show that the 14-day movements, like 26%. So that was a lot of sell pressure before, as people were trying to sell the news kind of event. So I think it's done okay since the unlock has actually occurred, because I think most people who wanted to try and make this trade or get out before had already done so. So price action wise, post all this unlock has been okay, which potentially is an indication that the people who have got these unlocks didn't just go straight out and dump it on the market, which is a good sign, but also it's a sign of where we are in the bull market.
Yeah, that it's saying a lot to maybe you would be really discouraged to see them to sell off, considering that we are yet to have a real big altcoin season as of late. So it would be a tough one to sell before we enter maybe another leg in the bull market there. Sticking to altcoins, I also saw Stacks, probably one of the other huge announcements this week. come out and said that their latest upgrade went live. So this results in 10-minute blocks down to 5 seconds, and tries to make Stacks what it's tried to be doing the last couple of years and being home to Bitcoin L2, although technically still a side chain and is yet to inherit a lot of the security that you would hope. This is what we saw with Ethereum, where things being falsely equivalent to Ethereum, where they just aren't there at the moment. But it's a huge step forward for Stacks, no doubt. Do you follow the Stacks ecosystem much?
I do follow Stacks, and I think this went relatively quietly in the crypto space in general, because this is a fairly big deal. It's obviously only going down to a 5-second block, which is incredibly slow compared to the likes of Solana and your Sui's and all the other newer blockchains out there. So in that regard, even the layer 2s on Ethereum are much faster than that. So to me, that takes it being technologically a little bit behind, but being able to unlock the Bitcoin collateral is a huge deal. And I think it has gone a little bit quieter than I expected. So I wouldn't be surprised to see some big movements in Stacks and a lot of the different projects being built on Stacks. That's definitely of interest to me as we go into this bull market. So maybe it's one of those sleeping giants that's going on, the layer 2 Bitcoin system, because it doesn't have the glamour of the meme coins that seems to be going on at the moment. It could be a sleeping giant, or it could be maybe a bit too slow and everyone's moved away from wanting to unlock that Bitcoin collateral. I don't know. I kind of feel that there's enough people that probably want to unlock their Bitcoin collateral there.
Yeah, I had the same mind because I did a write-up earlier in the year about unlocking Bitcoin DeFi or Bitcoin L2s, because they look like they're following the similar Ethereum route. For me, the big question is whether the risk is there, or the yield opportunities are worth it at the end of the day. Because if it's a marginal rate that you may be getting being put to work, is that worth the trust assumptions that you are making by moving your Bitcoin to some of these other less proven? Because at the end of the day, they are still relatively new and are yet to be real battle tested or potentially be exploited. That's going to be the big concern, I think, whether that yield opportunity is worth the risk you're taking on by reducing your trust assumptions. And I guess we'll see what the market says. You say that in a bull market, people's risk tolerance goes higher and people looking for more yield. So that's probably what I would expect, to be honest. I saw Babylon Finance, which looks to try and use Bitcoin to stake. So this is separate from Stacks, but they actually saw like billions of dollars worth of TVL and Bitcoin moved. So early signs saying that, hey, people are looking at some higher risk and there is interest in moving their idle Bitcoin.
Absolutely. And with 5-second blocks, it actually makes it more appealing. I was using Stacks previously and it was just uncomfortable to use, having to wait 10-minute blocks. So it wasn't user-friendly at all. But 5 seconds may be fast enough for most things these days. Really, we don't need instantaneous ones. Like, you can get 5 seconds is perfectly fine for most DeFi applications. So I'll probably go around and play on it a bit more and see if it's a bit more user-friendly and whether it's a space that I think people would want to be using.
Perfect. And to wrap it up here, normally Matt and I go through our rapid fire over or an underappreciated. Not sure if you had one there, Simon. A bit of late notice though, jumping on. Not to put the pressure on.
Well, you know what I'm just looking forward to is finding out whether this election has been under or overappreciated. So that's probably something we're going to talk about the next week. But like, this has just been such an ongoing saga. And I still don't know. Maybe if Kamala wins, the downside will be so minimal that we don't care and it will be totally overdone. I don't want to talk about the election too much because, as I said, most people might be hearing this and it's already decided for us. But that's my thing. Is I'm just wanting to know which one of those is under or overappreciated.
Yeah, I'm probably in a similar spot, to be honest. My underrated just went out to. There wasn't a lot of people talking about the impacts of what's called SAB 121 on the election. So a lot of people just looking at Bitcoin, but this is a piece of legislation or rule change that essentially makes banks being able to hold and custody crypto assets in the US a reality. At the moment, they can't do that due to really onerous laws and rules. This SAB 121 was actually vetoed by Biden himself. So it was passed through the normal procedure, but Biden said he didn't want it. And so DAM shut down, which looked like a huge milestone moment for the crypto space. I would actually expect this to be passed no matter who wins, because Kamala has said that she wants to be a bit more pro-crypto. She talked about crypto legislation. This is probably the lowest hanging fruit that you can do to make crypto in the US happen in a real way that isn't really too controversial, considering everyone has already agreed on it. So this is the one thing that I really think is underrated, because I think no doubt by the end of next year, we could start to see potentially banks start to hold Bitcoin for their clients in the US, which would unlock a huge new, I think, milestone for the space.
Absolutely, mate. Yeah, I look forward to hearing what they do with that. Yeah.
So that's a wrap for this week. Thanks, Simon, for jumping on. And so if you're looking for more insights, see our revamped Collective Shift newsletter, providing free market insights every Friday. So if you like and want to hear more of that, subscribe at collectiveshift.io/newsletter.